Weekly vertical crossover alert. Gold has crossed over, going down on our price percent oscillator. What does that mean? Well, for the folks that haven't been with us very long, it is one of the biggest signals that we have. Weekly vertical crossovers are extremely powerful. We can look back on the gold chart and see going back many months, going back over time, over years. You can see where when the vertical crossover occurs, in gold in particular, it tends to mean that the asset, or in this case the commodity, is going to be moving in that direction for quite a while. And what we have seen over the last week is a weekly vertical crossover occurring in gold. And we now have that confirmed. We've already gone ahead and moved the line, which is the marker for our weekly vertical crossover, over to the end of this week, along with we've rotated the arrow down. So now we have the 2-day and the weekly moving in the same direction. How do you use this knowledge? Well, we want you, again, to perhaps plot a practice trade on Monday. Look at what gold is doing. If you have the ability to check the market at 10:30, look at your 30-minute chart. We never use that except on this occasion to just see how the market's doing. Remember, things settle out after idiot hour, the first hour of any trading day. The market makers have a lot of control there. We wait for things to settle out, so around 10:30, or if you're busy and you can't look at things until noon, check out what the market's doing. If the market's looking like it's heading down on gold, that may be your impetus to go ahead and put in a practice trade on gold. Now, I'm going to put at the end of the video today how you can actually use freestockcharts.com and TC2000 for your practice trades. Those of you who've used it before, when you enter any symbol in, it locks in that price at that time, and it helps you track it. You can also put in the percentage change, and it will give you what your profit is as you go through the trade. So if you're a user of TC2000, you're thinking about it, now's a good time to go ahead and purchase TC2000. We give you a $25 discount. You can see a link in the show notes. Also, important news about the book, and also important news about the quarterly crossover that has just, well, the quarterly chart. We're going to review the crossover that occurred, where that is, and of course that occurred back at the end of this last year. We're going to look at the quarterly chart, help you review what's going on there on the S&P 500 for folks who are very interested in long-term trading. It'll also give you an idea as to what that largest chart that we ever look at, the quarterly chart, is doing. We're going to put that special training out over the weekend. It will go out to our Patreon members and our book buyers. So if you've been thinking about buying the book, buying it over the weekend's a good time to do so, because you're going to receive our special quarterly chart review. Okay, and if you've already purchased the book, it's coming to you anyway. And if you're a Patreon member, you're getting it. Also, Patreon members, don't forget, we're having our Q&A this coming Wednesday at 12:30 Eastern Daylight Time. We also need to get all of the stocks you want us to review and the ETFs, so we can do that in a separate broadcast for you. So get your questions in. You have questions about the market, we'll be happy to deal with those, and the stocks. Go ahead, email everything cw@chartingwealth.com. That's Patreon members. Let's jump into the charts and see what we see on this comprehensive review and forecast. S&P 500 up 0.63% for the day. How did we end the week? With a red open box spinning top. Now, that is not a strong down candle at all. It doesn't look anything like the three crows we saw heading down back on the weeks ending the 14th of December of last year, the 21st and the 28th. This is not that. It is, again, indecision, tending down, and we can see that price has moved trying to move through that weekly trend line, derivative oscillator losing momentum, but that all-important price percent oscillator still moving up. Lots of indecision. Those of you who've been looking at the quarterly chart know that that quarterly is pushing on the market, trying to keep it down. But we look at the way that the week ended up. First day of this latest 2-day candle is a nice up candle. Now, it hasn't moved above where the market peaked back on the 2-day candle ending Wednesday, the 20th of March. But it is forming as a nice up candle. Now, here's the deal, though. Price percent oscillator is negative. Derivative oscillator losing downward momentum. So we'll continue to see what we see. But remember, we don't have a trade in the S&P 500 because that 2-day chart is down. Now, those of you who might have hung on to a trade, of course, just playing on the weekly chart, okay, that's a dangerous thing to do. But we do see that the 4-hour chart has crossed over going up, pushed through the 2-day trend line, and decently above the weekly trend line. So we'll wait to see how the S&P sorts itself out. And again, we'll just watch and see what we see. If that 2-day chart does rotate over the next week going up, might give us an ability to jump in to more up movement in the S&P 500. Don't know. What's going on the Qs? Up 0.76% for the day. Our biggest up chart for the day. We have a red open box candle, not a spinning top. It's got a wick on top. So again, shows some slowing. It is not a solid red down candle, but it shows slowing after 2 weeks of prior up movement. And again, as high as the wick on top got, not nearly as high as the prior week. Derivative oscillator still losing a little bit of momentum. Price percent oscillator heading up. So again, that's okay. On the weekly chart, what do we see on the 2-day? Still hasn't crossed over, going down. In fact, after 2 spinning tops of indecision tending down, so far the first day of this latest 2-day candle is a green up candle. But again, nowhere near where things peaked back on the 2-day candle ending the 22nd, the prior Friday. And again, price movements well above the weekly. And at some point, we'll try redrawing the 2-day trend line. Haven't done that yet. Just had an alert say that, of course, our latest quarterly candle is expiring. So again, we will be getting that out for you. It just popped up on my screen. But we'll be getting that out for you over the weekend. Now, what do we see going on here? Well, like we said, derivative oscillator losing momentum. That price percent oscillator is just hanging above the red signal line. So we go from the 2-day to the 4-hour. And what do we see happening there? Well, that 4-hour chart is trying to cross over going up. What does that mean if indeed that occurs? Well, we have the 2-day and the weekly in confirmed up moves. So if indeed we have a crossover going up on that 4-hour chart at the beginning of the week, what is that? It's trigger pulling time, isn't it? To practice an up trade in the Qs. Now, there are some brave souls that may have stayed in the Qs because the 2-day had not yet crossed over going down. That's fine. You're still riding that out. But again, the candles are getting long in the wick. We'll just continue to watch and see what we see. But pay attention as the week starts out. See how the NASDAQ 100 does, how it shakes out. As the week starts, you might have a jumping in point for an up trade. Let's go to bonds. Bonds down for the day, 0.09% after super strong up movement over just building over the last 3 weeks, but this last week in particular, big strong up movement. Derivative oscillator gaining momentum. Price percent oscillator heading up. We go to the 2-day chart, first day of the latest 2-day candle. What do we see? More up movement, but really not matching where things were so far in this the first day of this latest 2-day candle, where things were in those prior 3 candles as they just strongly moved up, tapering off a little bit. Again, down a little bit for the day. Price percent oscillator tapering a little bit. Derivative oscillator, however, still oscillating further up. We go to the 4-hour chart. What do we see there? Really a sideways slide for the last day and a half. So we'll watch and see what we have to see. Now remember, we had a jumping in point after the 4-hour crossover occurred. So again, those of you who are in that practice trade, what should you be doing? You should be paying attention to your 2-day chart. And again, seeing a little bit of backing off and paying attention, of course, to your super strong weekly chart, all the charts all the time. Keep your eye on that 4-hour chart. Don't let it falsely pull you out of a move Watch it along with your larger charts. Remember, once you use your 4-hour chart to pull the trigger, that's when you step back to your bigger charts to help you decide whether or not you stay in and how long you stay in before you look to reap virtual profits. But this trade has been really good for us, hasn't it? It's done quite well. It's about time Bond did something for us. Been following bonds a while. Nice to see it giving us a potential practice trade. Gold up for the day. Our last chart to look at, even though we have the weekly vertical crossover in effect, how did we end the week with the Heikin Ashi candlesticks? Red spinning top, indecision tending down. Now, we would love to have that crossover occurring with a strong red down candle. It would make us feel better about the strength of this down move in gold, because we're sitting there saying, you know, the market seemed to be doing okay. Why would gold be rocketing down? There is some concern and worry there. So we will check things out on Monday. And again, not having a strong down candle either. A little bit of concern. But again, price percent oscillators usually very good to us. What do we see on the 2-day chart? We do see a candle and a half, just the latest day, but that shows nice, decent, strong down movement with the price percent oscillator clicking over, heading down, derivative oscillator heading down. That's looking pretty good for hopefully sustained down movement. We look at that 4-hour chart, and of course, what we see happening is the charts topped back on Monday the 25th, the latest topping, and then started moving down Tuesday morning. Wednesday, Thursday was the big drop, and then Friday. So again, where are things going to move down to? We're going to have to see them break through that 120, let's see, what was that, about 120, 121 something? So we're going to need to see that movement really come and pierce that bottom somewhere around the 121 something mark for it to really break out and move down strongly. So that's where we are, folks, as we end the day. If you haven't purchased the book yet, all the more reason to do so, because all of our book buyers are going to receive over the weekend our quarterly chart review along with our Patreon members. Patreon members, don't forget on Wednesday this next week, we will have our call-in Q&A. Get those questions to us. Also, send us your ETFs and stocks you would like us to review. We'll do a special broadcast for you for that. And buy the book. Become a Patreon member if you want to enjoy all the things we have available for them. Our quarterly chart training, our Bitcoin chart training, and our short chart training, plus that monthly Q&A, plus the stock reviews, plus if you're at that intermediate level, we give you a 15-minute, once-a-month personal telephone call. My friends, we appreciate you. We know you appreciate us. We hear from you all the time. If you are a foreign listener, please, by all means, if you would like to purchase the book, you can't do it through the clearance house that we use with credit cards and all. But if you will email us, cw@chartingwealth.com, that's our email address. Just email us, we will, and tell us you want to buy the book. We'll send you a PayPal invoice. Pay that, and we'll send your book to you wherever you are in the world. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.